All right, Ferris, you want to go ahead and kick it off, buddy?
All right, we'll do. Hello, everybody. How's it going?
Yeah.
I was going to kick it off. So, hi, everybody. I am Ferris Musa, one of the managing partners of Disrupt Equity. Most say I'm the charming half. I'll let you all decide. We've been hosting MFM, I guess, really, MFM is a national meetup brand where basically chapters across the country, we all fly the same brand and kind of have a little bit more of a streamlined system. And due to COVID, we ended up basically consolidating with our Dallas friends. And so we ended up kind of moving into a virtual one. And hopefully kind of get the Dallas guys, John, that's you guys getting back to doing the in-person here soon. We've been full steam ahead. I mean, we had one last Thursday and 130 people or so showed up. So, but today we're now here basically for the online version of that. And, we've been doing different topics throughout the whole time. And, we're excited to have Damion come on and speak. And so I'll let him introduce himself here shortly. But before we get going, I'll go ahead and introduce myself a little bit more. One of the major parts of Disrupt Equity, we have basically a company based here in Houston, Texas. We're vertically integrated. We have properties throughout Texas and Georgia and now Florida, and looking to continue to grow. So we have done a little over 3,500-ish units and continuing to keep up that momentum. And I'll hand it over to my partner, Ben.
All right. Well, if he's the charming one, then I'm the handsome one. So, but the co-founder of Disrupt Equity, as Ferris mentioned, we buy multifamily, so we have multifamily meetups, both in person as well as virtually with our DFW folks. Mr. John Montero is representing the crew tonight. For anybody that's here in Texas, hopefully you're staying cool. It's only still slightly, maybe below where hell is. So, but we do want to thank Damion for hopping on. Obviously going to share a lot of great things about EQRPs and all of his knowledge and how you can, maybe potentially invest in one of John's projects, one of our projects through your EQRP program. So go ahead and hand it over to Mr. John Montero.
Thanks, guys. John Montero here. I am the sole Dallas representative, I guess, this evening. Both Anton and Ronnie couldn't make it for various reasons. So good to be here. Thanks for joining us. I'm based here in Frisco, Texas, just north of Dallas. Been here since 2009 and moving here in the depths of the last recession. And it's been a phenomenal move for myself and my family. We focus the majority of our time on multifamily acquisitions and value add. And we also do ground up multifamily projects as well. So as of now, we've close to 11,000 units under management. The majority of that is in Texas, and another over 3,000 units at various stages of the development process, also all in Texas. So excited to have Damion on. I've known Damion for a long time. I am actually a customer of his as well. So I actually moved my traditional IRA over to his platform many years ago. And so if anybody is interested to reach out to me personally, happy to share my experience with the team or with the folks on the call. So excited to have Damion on.
All right.
Only 11,000 units, John? Come on. Weren't you like at 9 like last week? Come on, man. This guy, trying to keep up with this guy, but as you can see, folks, right? We know what we're doing. We offer this as kind of a free resource for, people in our community, right? We're here to provide great content, great speakers. We're not here to sell anything. It's all about obviously learning the business and doing some networking. So I do encourage anybody, after Damion does speak, we will have a couple breakouts, just depending on how long we run, but we typically at least have one. So if you do hang out and, you want to network, we'll have some breakouts after fact. But I guess, Ferris, you want to go ahead and pass it off?
No, I mean, my job's easy. I'm handing it off to Damion. Damion, and topic today for those that are just joining, building wealth through EQRP real estate investing. So Damion, you want to go ahead? Hopefully you should be able to share, and I'll let you go ahead and take the stage and introduce yourself.
Yeah, so I'm Parker Purcell. I work with Damion Lupo and want to introduce him for you guys. I work on behalf of the EQRP company, and Damion's given me the privilege and honor to be able to come alongside him in his journey to help free people of the financial shackles that hold them just hostage in this environment. And it it has been just such an honor to work for him over these past couple years as this company, this product, this community. Really, it's a tool, but this community has changed my life in so many ways. And I think that everything that he's going to share tonight will also not only change your life, but also change those in your community as well. And so I'm happy to introduce him to you guys, be able to share some of these resources and insight into his story and how he can really a lot of the things that he's implemented in his own life and through his experiences and why this company was even created in the first place. So Damion, excited to have you share tonight. Thank you for coming on, and just thank you for allowing me to be a part of the journey.
Thanks, Parker. Ben, thank you. Ferris, thank you guys all for having us. And Parker was a little off. He doesn't work for me. I work for him, and I work for the tribe. And the tribe is the people. It's guys like John and his family. And it's I get up every day, and I'm not talking Monday through Friday. I'm talking about Monday through Sunday. And I get up and I wake up thinking about how I can help people live their lives without the shackles of money. And the EQRP happens to be a tool that gives people a lot of choices so that they can really look at designing, having a future by design and not default, because I think our system is set up basically to be the matrix where it's the default settings and you just go through the motions and you wake up one day and you go, crap, I guess it's too late. I don't have any more time. And so you guys are doing a really cool thing here, helping people understand how to invest in apartments. John, you made a comment about 11,000 units. I mean, it's a good start. Maybe someday you'll hit it big and have some freedom, but truly this is, we've heard this with like the real estate guys. It's about getting money out of Wall Street and putting it into Main Street, investing, Main Street winning with Main Street investments, putting the money into Main Street. And I love that. And we're going to talk about the EQRP a bit and how it can be a tool for you guys and your family and friends. And really it's a tool that empowers you so that you have choices where you can design your life and not be beholden to a system that's really not built for your success. It's built to feed on you. Like it's kind of like Facebook. It's built to eat you. So without further ado, we're going to go jump into it. Let me share my screen here, and little shout out to my friend Jay Boersma out there in Arizona. I see a bunch of folks that I know, and it's great to have you guys on here. All right, let's do this. All right. And I can't see anybody's faces, so hopefully you guys can see a picture of the book. Somebody interrupt me if y'all can't see it. But this is a QRP book. I wrote the first copy of this about a decade ago, and I'll give you guys a chance to get a copy of it if you don't have a copy or you want an updated copy, as well as the Cliff Notes, because I know we're all busy and we got a million things going on. In fact, this weekend I was out in Arizona, and I learned that TikTok is a creation. I thought it was for dancing children and cats and things, but apparently TikTok is to teach, and it's about 7-second lessons. And I was with one of the larger influencers in that space, and I realized, wow, my 30-minute presentations are not for most people. Most people are looking for 30 seconds max. So I'm learning all the time too. So I'm here as a student, and as much as I can share my stuff, I will tell you that I'm learning every day. And I mean, I learned something, and I'm like years behind the trends in social media. So you got to keep learning, or you're going to get run over. That's the summation of today's presentation. One of the things that I do in addition to the EQRP company is I host this show, the Financial Underdogs. So if you want to hear more from me, my commentary, my comedy, and my thoughts on everything from inflation to the Federal Reserve and investing, you can go to FU and hear my chatter and ideas. So let's talk about something that it has started hitting the news this last year in a pretty big way, and it really got triggered by this guy. Some of you guys will recognize him. This is Peter Thiel. He was a co-founder of PayPal, and he made some headlines, and it wasn't because of his association with Elon Musk, who happens to be dominating things with Twitter and Tesla, but it was because he made a bunch of money. He's one of the biggest venture capitalists in the country, worth many, many billions of dollars, an advisor to Trump. And he started pissing off Congress because they found out he has $5 billion in his Roth IRA. So that's kind of I feel like Elon Musk has a picture that I've seen a lot that looks like that. Maybe they posed for something. Anyways, so this made a lot of people like Elizabeth Warren, AOC, the progressives really upset. They said, this is not good. This was not set up in 1999 so that guys like this could make a fortune. And yet all they did was take the tax code and use it, which is really crazy to think about because all of us have the ability to do that and yet we don't. And why? Because we don't have the teams, because we don't spend the time. I wake up sometimes at 3 o'clock in the morning and read tax code so that you don't have to. It actually makes me happy. Probably means I'm an alien. But the reality is he just used the tax code. And a little side note, in the 90s, the reason that the budget was balanced in the United States and everybody in Congress got all excited and congratulated themselves, the Roth retirement accounts were set up and a lot of people converted their accounts from pre-tax to Roth in the 90s, and that triggered a ton of money coming into the US Treasury, which balanced the budget and then screwed future generations. So it wasn't because Newt Gingrich and Clinton were great at leadership. It's because they basically screwed the future's generation. And unfortunately, we're dealing with that now. But the question is, how do you turn $2,000 like Peter did in 1999 into $5 billion? Because that's what happened. He took 2,000, put it into his Roth account, and then inside that shelter, that tax vehicle, he compounded it, and it was an interesting thing. So we're going to share about how you do that. It's really about taking ideas and going to a place where you can multiply your money by 100x versus double versus 2x. Wall Street talks about making 8 or 10% compounded. I'm not sure if they're talking about inflation or returns, but regardless, they're not talking about 100x. And that's how you do it. If you want to get wealthy, you want to get free, you got to do things like apartment syndications. You got to do things with leverage and teams, and you got to take your money away from Wall Street for the sanitized things and go into the kind of messy stuff. Because we all know in the real estate space, if you're going to create value, it's not because you just bought into something and nothing happened. Something happened because somebody made something happen. There's a value add. There's increased value with changing a property, increasing occupancy. There's something, and that's where the big leverage is. And so that's what we're talking about here. We're talking about finding ways to not only increase value, but not getting killed by taxes. And I'm going to show you guys how to stop paying taxes too. So if you're thinking, I don't know if this is for me, if you don't like paying taxes, I guarantee you this is for you. So we'll get into that. But before we do that, let's first make something really clear. There's a lot of people out there that don't realize that one of the tools that's been used for decades is a checkbook IRA, and those became illegal last fall. I'll get into that in a second, but a lot of times people go, oh, cool, I'm going to do what Peter did. I'm going to go do a checkbook IRA, and then I'm going to invest in real estate. Don't do that, because it'll literally blow up in your face like it did the folks that got pulled into the U.S. tax court in November. So we'll get into that in a few minutes, but I just want to make sure you guys are clear that a lot of things are changing. And this is also why it's so important to have teams and advisors and not like back 150 years ago, for a little history, Abraham Lincoln was an attorney. He was one of these attorneys that did everything. That's not who you want for your retirement accounts or for your figuring out how to do tax law. You want to find specialists that do one thing and they do it really well. That's what we specialize on and it's just kind of like if you're going to go get brain surgery, you probably wouldn't hire a dentist, most likely, unless that was the only person with a scalpel in town. But the reality is you want to find people that are specialists, and this is a space where if you don't have a specialist, you could literally pay the ultimate price and have your entire retirement account consumed by the US government. We're going to avoid that. The mission of what we do, what the company does, the reason Parker is a part of this, the reason that our team of 22 people is doing what they do every day is our mission is to free 1 million people from financial bondage. 1 million people unshackled makes a big difference. And I'll tell you why this really matters to me. When you think about all of the friction and all of the conflict and everything that's going on in the world, the underlying problem with most people is that their money stuff isn't sorted out. There's an anxiety and a fear around not having enough, and we're always chasing. In America, we're chasing the next shiny object. And a lot of the world, they are trying to figure it out, not us. Probably we're not trying to figure out how we're going to eat, but people are generally afraid of money because there's a scarcity, there's a lack of it. And I think that I'm convinced that finding a way to remove the money problem will allow us to reduce the stress, the anger, the violence, the conflict, and ultimately that leads to peace. I think money is the ultimate problem because it's misunderstood and it's manipulated. So our job is, in a strange way, but a direct way, it's or an indirect way, is to help create peace. And so unshackling people is our way to do that. There are two people that we need to be really thoughtful about and think about how they impact our lives. The king and queen of shackling. These are the folks that they're kind of like our Dr. Evil in a way. But the first one is this guy. This is Jerome Powell. And I used to give him a hard time, not that I know him, but I used to really say this guy's a nut and he's a terrible person because he's doing this printing thing. The reality is every Federal Reserve chairman and the Federal Reserve System in general that was set up 115 years ago is doing the same thing. They're printing money out of thin air, which steals the prosperity from everybody in the future. And they're doing this because it's profitable to the bank and the central banks. And so we have to figure out how to get ahead of that. Jerome Powell is, I think, trying to do a good job, but the reality is he's part of a corrupt system. And so we have to make sure that that system, we're using it and not getting abused by it. The crazy part is that over a period of about 12 to 18 months, 40% of the money in circulation was printed. This happened between 2020 and 2021 during COVID. Remember the CARES Act, the $2 trillion that was spent by Congress, and the balance sheet blew up from a trillion to 8 trillion. This basically created 40% more. Now, if you've ever heard Peter Schiff, my friend who used to live in Connecticut, I actually worked on his Senate campaign back 12 years ago, and sort of strange story. I got fired as a volunteer because I tried too hard to win. So apparently, if you ever volunteer for a political campaign, don't try to win too hard because they'll fire you. But he always had he had a philosophy around the Federal Reserve that is in alignment with me, and that we've got to fight against it. We can't allow it. It's ultimately going to enrich one party, and if we don't understand how this system works, we're going to get crushed by it. He said the same thing for many years, that when you print this money, basically you're going to wake up one day and you're going to say, okay, this is worthless. And that's what's happened. That's why we have the inflation that we have, because the money's being pushed through the system. And when we have today, I think it was just today, there was an announcement that there's 9.1% inflation, which is a good start. But again, that's not even reality. That's just what we're told. And so we've got to get ahead of this stuff. We've got to have real assets, not just chasing things, not holding dollars. The other problem we're dealing with is the congressional power that is in Washington, and it's being led by people like this. And this is what they're all about. They're about taxing people with money. They're not doing a very good job. They're actually just screwing all the poor and middle class, and they're out there claiming to protect the poor and the middle class. But AOC and the progressives and those that are really against creating wealth, they'd like to spend the wealth. They think that this number is not enough. This is the amount of money, 70% of your income and your wealth, the average American, is what's consumed by governments every year. So you think about that, you make $1.70. I used to think that there was this Freedom Day, it was like in April, where you started earning money for yourself. So like January 1st until April 30th, that was all money for the government. So that was like 35 or 40%. Reality, it's not Memorial Day, it's more like Labor Day. Like September that's how long you're working for the government. And so we have to figure out how to go from this number to this number. We have to figure out how to get to zero where you're actually keeping all your money, because I guarantee you that you're going to do better at spending your own money and determining where it goes than the people in DC. I mean, if you think that it's in your best interest and your family's best interest to put your money into things in your community, then it's a better idea to do that than to be shipping missiles around and starting wars. Then this is probably some information you want, because you know that your money is best in your pocket and your family's pocket than in the US government's. The tool that we're going to use to do that is something that I created about a decade ago, and it's the EQRP. It's the gold standard in self-directed retirement accounts, the gold standard in 401ks. And I say that because it's literally in a class of its own. It's not like anything else. Sometimes people will say, well, what are the differences between 401ks and IRAs and solo 401ks and self-directed? And I say, well, it's kind of like saying, what's the difference between a Ferrari, a Bugatti, and a Ford Taurus? And they say, well, they're all the same. I said, yeah, that's how you look at retirement accounts. The reality is those are all cars, but there's one that's a supercar, and that's the Bugatti. And there's also some great things called Ferraris. But the reality is we have to choose the best or get blended into all the rest. And what we're talking about today is the gold standard. It's the best in class, and it's what truly gives you power and control, unlike anything else out there. And I'll go into those specifics. Right now, there are about $2 billion in EQRPs in America. We actually have clients in a number of countries outside the US, expats. And so there's that the rough number is about 2 billion. This might seem like a lot or might seem like a little. The crazy part is there's about $30 trillion in retirement accounts. And so 2 billion it's like, like this micro 1/15,000th of the retirement account. So it's not really registering for Wall Street, but I guarantee you the people that have their money in EQRPs like John are very, very happy that they have control and they're not stuck. They're not stuck just hoping that Wall Street will perform, which quite frankly is a lost hope and a nightmare, not so much a dream anymore, because Wall Street isn't performing except for itself. And so we have to do better than that. A lot of times people will say, well, if this is so good, why haven't I heard of it? It's the gold standard. Well, I can tell you why, because there's a couple of guys that don't want you to know about it. The guy on the left is Jamie Dimon. The guy on the right is Bernie Madoff. They kind of look the same, little same hairdo kind of thing. Bernie's happens to be dead, but he was the greatest con man in history. I mean, they should have, instead of naming the Ponzi scheme after Charles Ponzi, they should have probably named it after Madoff. It's the Madoff scheme. He suckered like it was 40 or 60 billion dollars out of people. And he did that by promising something that wasn't real. He promised smoke or he promised returns of 12% consistently, and it ended up being smoke. And a lot of people lost all their money. People that we know, people like Kevin Bacon lost a ton of money. People that had $100 million with him and lost it all in a heartbeat. And that was an outright con, but I don't think there's a whole lot of difference between Bernie Madoff and Jamie Dimon. Jamie Dimon runs Chase Bank. He's a billionaire as an employee. And how did that happen? Because he stole from people. And I would say that right to his face. And it's because the type of activities that the banks do they're criminal. They go and they'll violate laws. For example, Chase 2 years ago was fined $1 billion for cheating with the silver trading that they did on the global markets. They make $1 billion a year. They got fined $1 billion over a 10-year period. So they said, well, good, this is a 10% penalty. Nobody goes to jail. You have to realize that the system, if you don't get out of it, is going to keep hurting you, milking you, robbing from you, and taking from you until death. I mean, that's just kind of how it is. It is truly a house of wolves, and we're going to get our money and our wealth out of it so that we actually have a chance. If it's there, you have no chance. That's just a point blank promise. It's how the system is built. So it really comes down to control. And that's one of the biggest things that people don't realize. You can actually have control with your retirement money, with your investments. You're not required to give them to somebody else. The unfortunate part, I'll go back to control for a second. The unfortunate part is Wall Street and advisors in general will try to convince you that you're too stupid to control your own money. And when you start talking to guys like John and Ben and Ferris, you realize that, wow, you know what? The real people like my neighbors actually are doing really well, and they're honorable, and we can make money, and I am not too stupid. That's been the narrative for many decades. And so we're going to switch the narrative. We're going to flip it on its head, and we're going to go and we're going to talk about how you can actually have control. So the EQRP gives you control. It's a retirement checkbook. Basically, you actually have legal control of your money because you're the trustee of your retirement plan. You can fund deals. When you guys have deals that come up that are great deals, when they're hot, you can't be sitting there and analyzing them and wondering, well, should I do this deal? I think I'll think about it for a month. That deal is gone. You've got to commit, you got to go, you got to take action. That's how you make money. That's how you go 2x, 10x, 100x. You got to be in the game and you got to take action. This thing doesn't wait for you. The market does not wait. Anybody that thinks that's true hasn't been in the market, because the market will crush you if you're waiting. The EQRP is a place where you can protect your money. It's lawsuit proof. It's bankruptcy proof. You have protection there. And unfortunately, America, if you go to any city, what do you see on bus stops and the sides of buses and billboards? It's accident attorneys. You know, if you've slipped and fallen, if you got into a wreck. I mean, in California, if you call somebody a girl, you get sued for hurting their feelings. And so like, this is the reality of the world today. And so we have to be careful about that and make sure our assets aren't targets. There's something called UBIT tax. We'll give you an example about that. And this is one of those things that a lot of people don't realize is out there, because quite frankly, nobody wanted to tell them about it at IRA companies, and it's getting people killed when they have their apartments sell. They're realizing, wow, I actually should have known about this, but nobody told me. So I'm going to tell you about that now, so you don't have a 37% hickey or tax that you didn't realize was brewing and coming at you. And then the EQRP is really set up for anybody that's self-responsible. It could be you, it could be your kids, your employees. It's an available tool. It's not meant for people that are reckless. Quite frankly, people will say, well, who's this not for? And I say it's not really whether you're a butcher, baker, candlestick maker, employee, employer, it doesn't matter. It's about responsibility. Are you self-responsible? If I've seen people that are reckless, and I say you probably shouldn't do this. Either you're reckless or or nervous and don't want to take a step. Some people probably should just have their money with advisors, and because they're not willing to do the work. The secret to making money and becoming financially free is a 4-letter word. And I tell you this from 25 years of experience. I've lost all my money 3 times. I've become a multimillionaire multiple times. And the secret to everything in that process was work. That's the 4-letter word. So you want the secret, that's what it is. And so this is a tool meant for people that are responsible and that are not afraid of rolling up their sleeves and doing the work. Options that you have inside of an EQRP, real estate of any kind, whether it's apartments, it's mini storage, it's land, it could be in the US, it could be in Panama, Costa Rica, it could be, I mean, really anything, and all sorts of other things, gold, physical silver, Bitcoins, cryptocurrencies, you name it, you can do it. There's a few restrictions, like you can't do a project that you're going to end up like living in. You can't go and build a lake house with your retirement account money and then live in it. Although you could do that if you wanted to wait until you're 59 and a half, you distribute it to yourself. There's a lot of little nuance, and this is why you have a team. You know, you talk to Parker, you talk to the people on the EQRP team, and they can figure out how you can use these tools and give you options. But the reality is, it's not about stocks or bonds. You can do that, I mean, with any generic plan, you can do that. And you can do it here too. This is about giving you options where you can go to the 100X and not just a 2X over 20 years. So a great example, or great thing to really understand is the difference between self-directed IRAs and EQRP. And that's because self-directed IRAs have over $10 trillion in them. And so that's what most people know about. If you've left an employer and you had a 401k or something, oftentimes you end up moving into a self-directed IRA and you think, oh, this is cool, I have control. And kinda, but there's consequences and you don't actually have total control because there's a custodian. So the problem with IRAs is that they're slow. You get taxed with UBIT if you have any leverage, like in a real estate deal. If there's debt in that deal, UBIT's coming at you. And then you can only put $6,000 a year in. So over a 20-year period, you're really not going to get anywhere. You're going to put $6,000 in, you know, you're going to have $100,000 in this deal for over 2 decades, and you're not going to be rich. You're just going to be old. So EQRPs are completely different. It's fast because you're in charge. You can fund things in minutes, not weeks. It's tax exempt. You can actually end up paying no taxes over your entire life. There are ways to do that, especially with real estate. And you can put 61,000 or more per person per year. We have families that are putting over $250,000 into their EQRP tax-free from the start, and then tax-free as it grows and tax-free when they take it out. This thing it's like the greatest secret that nobody talks about because they're overwhelmed by all the media and all the advertising from Wall Street and mainstream media. So this is going to be a tool that you're going to say, wow, I wish I'd have known about this 10 years ago. And so fortunately, you will know about it now and not find out about it in 2032. Here's a deal a friend of mine did in Texas. Some of you might even recognize this if you've been to Austin, where I used to live. It's a syndication. It was a hospital out in Westlake. And the deal was a $50 million deal, $10 million of investor money, $40 million in debt to build this medical facility. And then 5 years later, sold for $70 million. So from 50 to 70 sounds good. It's $20 million in profit. The problem was the people that used their IRA doubled their money. So their $100,000 turned into 200, but because it had leverage and because it was an IRA, they ended up getting hit with UBIT tax, and the average IRA paid $25,000 out of pocket in extra tax. Even if it was a Roth IRA, they got killed. And everyone that was there said, wait a second, how come this is happening? How come I didn't know? And quite frankly, most people don't even know. I know guys like John know about this because they've been around, and there's most people just don't know that this is coming. So some of you that have syndications, you're either sponsoring them or you're in them. It's really important to get ahead of this, because once a property sells, once the syndication is sold, it's over. This tax is coming. There's almost no way around it. So really important to fix it, and it can be fixed. The UBIT tax is a unrelated business income tax. It's triggered, so it gets triggered by unrelated debt financed income. What that means is there's some type of income that's generated from a leveraged asset. And in this case, it triggers a 37% tax, which is brutal and totally unnecessary. IRAs in this case, anybody that did an IRA is paying $25,000, maybe more in tax. EQRP investors in this deal paid $0. So that it just kind of tells you it's okay. This is the same deal. It's the same dollars, and yet one group paid $25,000, one group paid $0. So the question is, why would you ever pay taxes? It's because you didn't know any better. So this is about having better facts so you can pay less tax. EQRP doesn't pay tax because it's exempt from UDFI. So if there's a leveraged investment, you can leverage it 99. You could put $1,000 from an EQRP into a deal, have 99% leverage, turn that 1,000 into 100,000, and there's no tax. You do that with an IRA, you're probably spending about $35,000 on tax. So it's just a different vehicle and a totally different outcome. One of our clients became a client, saw me in Phoenix with a guy some of you guys may know or heard of before he passed away last year, Gene Garino. He does the residential assisted living academy, and I was with him teaching. And after I spoke, a gal came out named Mara, and she said, "Hey, we just bought and rehabbed this property. We put a few $1,000s of our IRA money into it. It looked pretty good. They were showing me the numbers, and so net profit of 68 grand, which is, I mean, it's not bad." And then she said, "But we got a problem." And I'm like, "Yeah, you used an IRA, didn't you?" And she said, "Yes." And I said, "Okay, so what's the deal?" She said, "We're closing next week. We have it under contract to sell it." And I said, "Okay, well, we can fix this from your deal. Do you want to do that?" And she said, "Yes." So they converted it to an EQRP before they sold it. So within a week, we got the asset converted to the EQRP. They sold the property from the EQRP. They got to keep the whole 68,000 bucks. That's $20,000 in savings. It took them like 15 minutes to do the application and a call to the custodian. We got it rolled over. 15 minutes. That's damn well better than Geico's 15% in 15 minutes. So you think about how much money you can create if you have the right team and the right activity. 20,000 bucks in 15 minutes. I mean, you think about that. That's okay. If I could do that every hour, that's a pretty good living. So if you are already invested in a deal with a self-directed IRA, here's what we do. We take the asset and we move it. So we just literally, it's called an in-kind rollover. And once it's over there, there's no UBIT. It's exempt. And this can be done. You don't want to try to time this because if you're off, it can cost you a fortune. We had somebody come in, I think this was a year and a half ago. He came in and he said, "I just found out about you guys. I just sold." It was like $1 million plus in profit that he made with his IRA. He had $400,000 in UBIT tax. And if he had come to us like 3 months earlier, or if anybody had told him that, "Hey, you can move your assets," it would have saved him 400,000. That's all he had to do, but he didn't know. And fortunately, y'all never will have to make that mistake because it can be fixed. So this is where information is power if you actually do something with it, but you got to start by knowing it. What I referred to at the beginning was basically the court case that made checkbook IRAs illegal. Some of you guys probably have checkbook IRAs. In fact, the company checkbookira.com was named in this court proceeding, and they're still selling these things, which is crazy to me. But if you have a checkbook IRA, the court, and you can read about this on the EQRP.co site, the court ruled that you cannot have control and command of your assets in an IRA. A custodian needs to be between you and your assets. And unfortunately, people have like this company had been saying, "Oh yeah, this is no problem. Take your assets. You can buy gold and keep it yourself in your IRA." And that's what these people did. The court said, "No, wrong. You've abused the system." And they had a $250,000 penalty, fine, and tax event, which is a huge problem. So this is the law. The law has changed. Checkbook IRAs are truly illegal. You don't go to jail. You just end up getting hammered and lose a big part of your retirement. So just don't do it. I mean, fix it. It's easy to fix, but you got to fix it before, because they are going to go after people with these things. They've already proven it, and it's a giant honeypot. Federal government is going to look for places where they can milk people, and this is a great one because people are cheating. So who can do an EQRP? If you're a real estate agent, if you're self-employed, if you're a passive investor and you're managing your assets, if you've got a W-2, you got a job, that's totally cool. If you have employees, there's no limit. So who did I disqualify? I don't know. I mean, my own mother is sort of qualified. I'm not saying she should get an EQRP, but it really, anybody that says, "I want to stop paying taxes," this is a way. This is one of the pieces. So we know that with real estate, you can reduce or eliminate your taxes with being a real estate professional. So there are ways to do it. This is another arrow, if you will, in your quiver, and it's a valuable arrow. And the reason it's not the only one is because things change. Like, my suggestion is make sure you have lots of different tools and you can do lots of different things, because Congress will change things. For example, I am confident that Congress is going to eliminate the Roth accounts in the next decade. And they'll do it and they'll say, "Okay, if you already have one, you can keep it, but no new Roth accounts." So you want to think about that and get ahead of it. They did this a number of years ago when they called it the stretch IRA. So like I have one of these things from years ago from my dad, and the deal was you could have a Roth IRA. When somebody died, the person that inherited it gets to grow it, spend it the rest of their life. It's called a stretch IRA. So it's like 2 different lifetimes. Congress said, no, we don't like that. We're going to only allow you to have it for 10 years. Then you got to totally take it out, because they wanted the money back in the tax game. So what Congress creates out of thin air, they can also take away. And so I would encourage you guys to take advantage of things that are sitting there. I don't think Peter Thiel's a dum-dum, neither is Mitt Romney, and Mitt Romney has over 100 million in his account. And that's an old number. That was like 5 or 6 years ago. And Peter Thiel at this point probably has $6 or $7 billion in his account. They're not going to go screw themselves. They're not going to vote against themselves. A lot of people in Congress, and I was very close to Congress last year, just people inside and spending a lot of time in DC. A lot of people there, these people that are in office, they have these accounts, and they're not going to go and blow themselves up. So if you figure out what the lawmakers are doing and do some of that same stuff, and I think you'll find that you'll do pretty well. So getting money into an EQRP, you can roll over 401ks, IRAs, thrift savings plans, 403bs, like any type of retirement account other than Roth or inherited IRAs. So it's really just that narrow. I don't know why but I mean, this is Congress, so who knows? And then contributions. So if you've got self-employment income, you can put up to 67,000. If you're over 50, you can put that much money into your account each year, plus your spouse, your kids. So there's a way to put a lot of money in here. It can be deferred or Roth. IRAs are really interesting because if you make too much money, the government says, no, we don't want you to have a Roth account. So that's kind of lousy that you can't actually set up and have a retirement account, but you could do unlimited amounts. You can have unlimited amounts of income with an EQRP and contribute. So I think it's more fair. IRAs are sort of strange. Like you have to literally be broke to be able to do an IRA, and then it keeps you broke because it's only $6,000 a year. So it's kind of stupid. It's sort of like the cycle of poverty. Back in 2020, there was another act that was passed, another piece of legislation with Congress, and a lot of people years ago set up solo 401ks, and the law changed with the Secure Act. And so what it did is it said if you have you cannot have any part-time, full-time employees. So part-time is like 10 hours a week. And Congress is getting, and the Department of Labor and the government is getting really, really aggressive, if you will, about what an employee is. And you see a lot more, even in California right now, the truckers, and this was legislation that happened with Governor Newsom. They said, oh, we want all the truckers to be employees. We don't like the idea of people being self-employed contractors, which is going to create a bigger crisis with the supply chain. So why is that important? Because if you have an employee of any sort, or you have a contractor that gets tagged as an employee, your solo 401k, if you have one, is blown up. An EQRP allows unlimited amounts of employees. So if you have an EQRP and you don't have employees, you're good because you can always add employees, you're fine. A solo 401k, you'd have to actually shut down or convert to an IRA. And we already talked about how dangerous that is. If you have leveraged real estate, you're literally setting yourself up for UBIT tax. So EQRPs avoid all that stuff, plus they have audit protection. We'll talk about that in a second. No solo 401ks have audit protection, and they're generally open to liability from being sued. They don't have the same protections that big 401ks have under ERISA. So a lot of protections, a lot of flexibility to grow. You don't have to promise to be poor to have a retirement account. You can actually say, I'm going to go into the highest tax bracket of 0. And that's the idea here with EQRP. The other thing that's really valuable for you guys to know is that until the last year and a half, there wasn't really a way to have a company with employees and have the type of controls that you have with a safe harbor EQRP. It used to be if you wanted a 401k, you were stuck with stocks and mutual funds, and that was it. So you're like, okay, well, and that's why a lot of employers, a lot of doctors and professionals were like, I don't really like my retirement account, especially ones that invest in real estate. They'd rather put their money in real estate. Well, now there's no limits. You can have employees, you can invest in real estate, and that's through the safe harbor EQRP. The great thing about that is everybody wins except for Wall Street, which we don't care about. Everybody gets to choose how they want to invest. Doesn't matter how many employees are there. A safe harbor gives gives the owner and the employees control of their retirement accounts, and it saves the average business like 30,000 plus a year. So truly, it's an amazing option. So if you are an employee or have employees, something to really think about if there's real estate, and I think that's probably why we're here, that you're here tonight, is thinking about how you can use real estate and other tools and blend those together. A few things that I'll share with you, and then we'll do a little Q&A if you guys want, or give you a chance to get a copy of the book. Retiring early, K-Roths and auto protection. So retiring early, and many of you already know about this in terms of being a real estate professional or having a spouse as a professional. It allows you to take losses, passive losses, and offset active income. When you want to convert money inside of a retirement account from pre-tax to Roth, that creates a taxable event. And so one of the ways to offset that is to go buy some real estate and get a loss with bonus depreciation. And then, so like in this case, you can, let's say you bought $1 million building and you got $300,000 of bonus depreciation. You could use that to offset a $300,000 conversion from pre-tax to Roth inside of your EQRP. And those two would offset each other. And if you're saying, well, I don't necessarily have $300,000 outside of my EQRP, okay, well, there's a way here for you to actually get your money out of your retirement account and use it for that property and not pay tax or penalties. So huge opportunity for you guys to really tap into something that a lot of people think of as a dead asset because they say, I can't really use it till I'm 60. Guess what? You could be doing this stuff when you're 30 or 40 or 50. So a lot of opportunities here. And again, happy to go into the details. The team and I can help you guys after this in the coming days and weeks. Next one is the K-Roth. This is the minor deductions. So if you've got kids, one of the things that you can and probably should be doing is paying your kids for something. And the reason being, the tax brackets changed in the last few years. The first tax bracket is from 0 to 12,950, and that's a 0% tax bracket. So if your kids are earning money, if you're paying them, say 12,950, 13 grand, you could pay them, you could have a deduction against your income. They make that money, and that money can go into their Roth EQRP because it's been taxed at 0. So not being taxed going in, you get a deduction, and then it grows compounding tax-free. That money gets to be used by your kids for college, all of the gains tax-free. It could be used for when they're retiring. All the money that you put in over the years as contributions can be taken out anytime, tax and penalty free. This is a really useful tool. If you have kids and you're not paying them, you're really missing out. So make sure you talk to your tax advisors and your strategists. And if they say, well, I don't know about this, probably should fire them. Oh, by the way, if you're trying to figure out why there's a kid in the middle of that, that was me as a JCPenney model when I was 5. So one way to pay kids is to have them model for your business. Other ways are, have them tweet for you, which apparently is very expensive. I didn't know why that would be, but reality is lots of ways to pay your kids, worth looking into. Let's see, we went through, so this is how you do it. You can kind of went through that, and a lot of options there. And then another thing that's happening that people don't realize is the IRS is set to get an additional $80 billion in new funding. That's going to be used for paying for new agents and for a lot more technology. We're seeing the IRS getting a lot more aggressive. In fact, it's crazy that you're 4 times more likely to get audited than to have a house fire. And there's nobody that I know of that has a sane brain that would buy a house and not have fire protection. Everybody has insurance. Like you don't say, I'm just going to risk it. Like you're in Florida, like are you not going to have some type of insurance? There is going to be a hurricane in the next 5 years that's going to blow by you. So if you're going to have insurance, if you're going to have protection for your houses, you probably ought to have it for your retirement account, which is in all likelihood going to be what's going to protect you in a lot of ways for your future. EQRP is the only retirement plan that has audit protection against the IRS. And if you've ever been audited, it's not necessarily cheap. The average audit, it's about 25 grand. So having that built-in protection is a huge advantage to where you don't have to worry about the IRS, because I guarantee you an IRS letter is coming to you at some point soon if you have any type of money. And even if you don't, they're just sending these things out like it's like on autopilot. There's no thinking involved. It's just a big machine. So something to really think about. You don't want to be facing the IRS alone. And if you are, it's incredibly expensive. This is one way to not have to worry about that. Barato se caro. Anybody speak Portuguese? Been to Brazil? It's one of my favorite sayings. It means cheap objects can be expensive. And so I have this theory that if you're going to be cheap, it's going to cost you 10x more than it costs to not be cheap. And one of the cheapest things people do is they take advice from their neighbors, their friends that are no offense, but like idiots. They don't look, and I'm not saying all your friends are idiots. I'm saying we tend to just, it's like proximity. We hire the accountant next to us. We want to know what our friends and family think, even though they have no experience in real estate investing. It's important to listen to people that have experience. Like if I was going to say, okay, I want to learn about apartments, I'd talk to John. He's got 11,000 units that they've done. I'm pretty sure he knows more than my neighbor. I don't care who my neighbor is, unless he's, he's a Jorge Perez or somebody that's done, 100,000 units. But the reality is that's who you talk to. And it's true that life is too short to argue with stupid people. It's better to keep your mouth shut and go find people that are way ahead and then model. This is I love this. This is a quote: "Real assets equal real freedom." And when you think about paper assets on Wall Street, and you guys probably, I'm singing to the choir, but the reality is paper assets are not freedom. Paper assets get manipulated. They get twisted. It's like paper silver, ETFs versus real silver or gold. One is real, one is fake and smoke. And so you want to think about that when you're investing. I love that you guys are here and part of the groups looking at real estate, because it's a real asset. And that's where you're really going to find freedom. You're not going to find it in a stock portfolio. Biggest concern that most people have in America right now is they're going to run out of money. This is millennials, it's boomers, everybody has the same concern. And it's a legitimate concern. I mean, when our dollars are buying 10, 20, 30% less than they bought last year. Look at, I just filled up my tank and it was kind of crazy. I looked at it and I thought, I've never spent $6.40 a gallon on gas. I wasn't even in California. I was in Arizona. I'm like, shoot, if this is this much, it's probably $8 in California. That's just one thing. And so it's a big concern. People are concerned they don't have the money. They're not going to have the money down the road. And so that's what we're here for. We're here to educate you guys. You can see Parker right there in the middle. This is the team. We're out in Dallas last year and educating people. And probably some of you guys were there hanging out with us at the Real Estate Guys event. And so our job is to educate you, educate your friends and your family, and give you guys real tools and real options for a real awesome future, and not just one that you're afraid to enter into. So part of this, the main part of this was educating you guys, and our company and what we do is about teaching you and your friends how to safely 10x your retirement money so that you actually can have a life by design and not by default. So what I would encourage you guys to do is get the information to share with people and be a little bit of a superhero. The best way you can do that is to share it. And so I'm pretty sure everybody has a phone, and it's probably right next to you, like mine right here. What I want you to do is text this number, and our system is going to send you a copy of this report that sums up the EQRP, so that you can say, okay, I want to dig into this. It'll take you 10, 15 minutes to read it. Not only that, even if you don't even use it, or you're like, I don't care about retirement accounts, I guarantee you there's somebody in your life that could use it, and it will likely change their life. There's just too much information and misinformation and confused information out there. This will boil down the real facts, the real information, and give you a real chance at designing your life. So please grab a copy of it. Just text the 307-213-3475 with the word EQRP and get a copy of that report. It'll then give you it'll ask you if you want a copy of the book. So those of you that like more data and all the meat behind the cliff notes, you can get a copy of the book, and the team will send you a copy of that. It's on me. And that is it. I'm gonna stop sharing. And if you guys have any questions, or there may be some questions in the chat and things, but I'm happy to be here for as long as you guys want. And thank you so much for your time. I really appreciate the attention.
Thanks, Damion. I mean, I love your, I don't know, maybe I'll just go on a libertarian type view on this whole thing, right? Because I think everybody that's on realizes that there's a better future. There's a better way of doing this. There's a better way of taking your investing and your retirement into your own hands. And that's what we love, Robert and Russ. I mean, I love their saying, which is, kind of ripping, market share away from Wall Street and giving it to Main Street. And, that's what we kind of live by too. And I know John does as well. So very informative. One question that kind of piqued my interest, right? We're growing. We have a lot of employees on the disrupt management side, which is our property management side. And we're talking about rolling out a 401k, which I hate. And I don't like the whole idea of it, because there's just a lot of fees involved. So you piqued my interest on being an employer and rolling that out, right? So I'm assuming, obviously, if our HR folks have questions, we can reach out to you and you guys can kind of help set that up. and maybe even from an education standpoint too, because I think a lot of people get a 401k somewhat, or they might have had it at a former employer, but they might not understand this. So do you guys also kind of help with that education piece with HR teams and people that want to roll this out to their employees?
Yeah, and that's most of what we spend our time doing is educating and then supporting. So we have a pretty unique philosophy. It's super high touch. It's human to human. And so we spend our time on the phone. When you call, you get a human, and like we spend hours fighting and wrestling with different custodians and different plans, ultimately to give our clients control of their money, and that includes employers like you guys. So that not only do the employers, because in a lot of employers, once you take the red pill and you're like, oh, I want to get into Main Street stuff, you're like, well, I hate my 401k because it's stuck in paper. And what we did is we created something where the employers and the employees can take all their money, get all the tax benefits of a 401k, and then you could take 0 up to 100% of your money and put it into real estate and things. And that's incredibly useful. And it's actually a strategic tool too. When you think about people, you're trying to hire great people in labor markets that are hard. If you say, hey, by the way, we have a very cool way for you to invest in the projects we're doing or in other stuff with your 401k, like all of a sudden you're the only game in town. And that's freaking awesome. Plus, as an employer, you're going to end up putting tens of thousands of dollars a year back into your pocket because you're not going to be getting killed by some mutual fund the way that most 401ks are set up.
So 2 questions, and I'm sorry if everybody dropped their questions in the Q&A. We'll do a little of that with for Damion. But so 2 questions. Can you do a match? And maybe these are naive questions, so just bear with me. Can you match like a 401k within this program?
Yeah. So the Safe Harbor EQRP it has everything that any 401k has out there, plus all the other options that they all block you from. So all the matching stuff, like we have one at the EQRP company, we have our own product. I mean, imagine that, we're eating our own cooking, and we've got it. So we've got a 5% match, dollar for dollar, 5% of people's their wages, and then they're vested immediately, so they get to use that, and then they'll invest in things like gold, silver, real estate, and they have the stocks and mutual funds all set up as well, so they can do that as a default if they want. So all we're doing is giving people more control, more asset options, and an actual chance versus going, I hate my retirement plan.
Love it. Love it. All right. Last question. So, I can let some other folks kind of step in, and again, maybe a naive question. So I guess, is it 59 and a half, just like with the Roth, that you can roll out of it, or what's the age limit that you can, kind of start rolling it or taking, I guess, distributions against it, right?
So 59 and a half is the traditional number, which if you don't do any type of strategy, it's 59 and a half, but there's all sorts of ways to pull money out at any age. And I'm being deadly serious. There's ways to pull money out at any age without paying any taxes or penalties. And that's through strategy, and it's through a team. You can do things with 72 Ts, which is a roll, it's pulling your money out over a period of time before you're 59 and a half. If you're buying real estate, there's a way to convert your retirement money and not pay taxes and pull it out at 30, 40, 50 years old. So when you have the right team, you have a lot more options. If you don't have the right team, you have Google. Google's not your friend, because Google will tell you what you want to hear. And if you say, well, this is what I thought, it'll tell you you're right, even though you're wrong.
I thought we could learn everything from Google. Come on.
Yeah, you can.
Yeah. Well, no, we appreciate it. I don't know. Let me just scroll here. I think Parker did a good job kind of fielding some questions along the way. Let's see, what will be my options with my W-2 plan when I turn 59 and a half in 2023? I would like to roll over funds to my EQRP. Parker just said, Mark, you set up a time on Calendly. Okay, so you got that one, Parker. I don't know. Is there anything else, Parker, that you didn't hit? You want Damion to kind of go through? I think you did a good job kind of fielding this stuff.
Yeah, I think the thing is like everybody's situation's different, right? So the EQRP fits a certain individual that wants that control, wants that freedom. But our team, what we do is we really unpack your specific situation. And sometimes it's a timing thing. Sometimes it works right now. Sometimes it's a no, not now, right? But the only time it's a no, not ever is when the other individual just can't get past the point of making that mental shift of taking control for themselves and just hoping that, someone else controlling their future is going to take care of it for them. So that's why our team's here. It's why Damion invests in us as individuals and allows us to be a high touch, high nurture environment, so we can answer those questions and spend as much time with you on the phone to really unpack your situation and help you understand your goals and get you to where you want to go. We'll only tell you how to do it. We'll never tell you what to do. And ultimately, I think that's the best thing, right? We just want validation that we're going in the right direction and not get hammered for it on the fees and other things that you see in this environment traditionally.
One thing that I think is really important for everybody to think about, when y'all are doing deals, everybody runs out of money unless you're Peter Thiel. And like, you know, if he wants to go to space, he's going to run out of money. He's going to have to borrow Elon's space shuttle, but everybody's going to run out of money. And here's the thing, there's $30 trillion in retirement accounts. So when you run out of money, or if you just actually want to get rich with your friends, one of the things that you can do is share that. A lot of people use EQRP. My partner and I over here in Birmingham have put over $100 million worth. Like, we've physically brought in $100 million for our own deals that we've done. A lot of money has come from retirement accounts, and it wouldn't have if people didn't know they could do it. And so you guys can help unleash a lot of that money by sharing these ideas, and ultimately that allows everybody to get richer, freer, faster.
Love it. Love it. And one other thing I wanted to just clarify too, because, you know, you'd said that you can put in up to 67,000, but then I saw something about there was no income limit. What were you trying to say by that?
Yeah, so with IRAs, there's a limit. If you make too much money, which is less than $200,000 a year, then there are limits on even being able to contribute, and you have to do all this backdoor stuff, and Roths are excluded. With an EQRP, it doesn't matter how much money you make. There's no limit. You can make $1 million a year and still contribute individually 61,000 or 67,500 if you're over 50 per person. So like we seriously have families that are putting $250,000 a year in because they max it out for everybody. And there's lots of really creative ways to do all that contribution. So the rules are set up. You've got to be smarter than whatever's in Money Magazine or Kiplinger's or whatever. You've got to say, okay, who do I get on my team to strategize this stuff? And then you realize, wow, I can actually live tax free, and that's one of the ways to do it.
Well, like Tom Wheelwright said, it's our American duty to follow the tax law, right? You know, I mean, so, you know, I mean, you're just doing what they're allowing you to do. You know, so let's see here. Any other questions? Is everyone an EQRP team bald? I can't deny.
Yes, we are. It's a requirement.
It might be a requirement. All right. So one last question, Damion, you've been very gracious with your time. What is the tax benefit regarding contributions?
So it depends on, so, you know, it's funny, anytime somebody says, here's the absolute answer, run. The best thing you can do is find people that will say it depends, especially with tax or accounting or legal. I mean, there's especially with accounting. Our friend over at Provision, Tim Gertz, says this all the time when we're teaching together. He'll say, well, it depends, because like, it depends. You can get tax deductions by contributing. You can also use Roth. You can also get tax deductions now and then convert your money later and use real estate depreciation to offset the conversions. So potentially you could wipe out your active income with this type of contribution. There's so many ways to do it, but the reality is it's in your hands. You get to choose. If you wanted to reduce your income, like one thing that you might want to think about is, let's say you had, I don't know, you had $250,000 worth of income, and you said, well, I want to reduce, I'm in this tax bracket. Well, if you reduce your income down to say 190, it may drop you down into a different tax bracket so that you're paying tax at a lower rate because you pushed yourself down. And that's one way people can do it. Plus the qualified income or qualified entities where you get a 20% deduction, it only happens up to a certain income level. This is where if you have like an LLC, 20% of your income is a tax deduction, but that happens if you're at a certain level. Well, you could reduce yourself down into a lower level, and I'm probably losing people like, what is he talking about? The reality though is this can be a tool that you use for a lot of different things. And this, don't worry about learning all of it or knowing all of it. Say, okay, I need to have the right people that can help be a part of my team. I don't know everything. I know my little thing. And then I get with people like Tim at Provision, and I get with our attorneys, and we all work together as a team. And I get with guys like John and the people that are doing real deals, and we're always talking about what we're doing. Our friend Dave Zook, we're always talking about like, what else can we do to reduce our taxes? And so ultimately, this is potentially a great tool, but it is not the end all be all. It's just a really great tool to add in.
Love it, man. Hey, one thing just for the recording purposes, you know, can you drop in, you know, your website And maybe, you know, Parker, I think you put your contact information in there as well. Just, yeah, I know you have the special report, but just for everybody that might want to just reach out via the website as well, you know, for your benefit on that too. But wanted to thank you once again, Damion, Parker, very informative. That's what we love having this stuff. We got some really smart folks that come on and educate us. So we love learning new strategies. And I think you hit it really on the head, Damion. It's all about having the right team. So I know there's probably a lot of people that are a little shy. They don't want to ask you know, maybe something's very specific or unique to their situation. Reach out to Damion, reach out to Parker. They'll talk you through it. Good guys, and ultimately help a lot of people, you know, obviously save and make a lot of money. So again, thank you very much, sir. Appreciate you.
Thanks for having us. Really our pleasure being here. So we appreciate you guys spending your evening with us.
Cool. Well, for everybody that wants to stick around, I think Ferris, if you could hop back on, we're gonna kick it off on the breakout rooms here. So we'll keep it short. It's already 8:36. We typically like to wrap around 9, maybe 8:50. So maybe we'll come back on in about 10-15 minutes. But look forward to seeing you in the breakout room.
Always.
All right. Well, thanks everybody. We appreciate you, you know, hanging out and also doing the breakout. So hopefully you guys got some value out of hearing from Damion. We will send a recording out. So if you missed something, you know, give it a couple days. Our team will send that out, and stay tuned. We have these every month. What is it? The second Wednesday of the month. Is that how we do it, Ferris, on the webinar?
Good question. I don't even remember. I think it is the second Wednesday every month.
Check it out. We'll be emailing everybody, but I think that's what it is. But we appreciate everybody tuning in. We'll go ahead.
Thanks a lot, guys. I really appreciate you guys. Ben Ferris, I remember you guys. You changed my life.
Too, man. I met you at the bar at our info.
You did. You guys changed my life. I always say,
wow. Okay, well,
you did. I'm forever grateful. And John Montero as well. I met you at the bar, and I'm like,
I remember.
John,
I remember you and your wife.
I know. And now I'm syndicating my first apartment building in San Antonio.
Wow.
Congratulations.
Okay, you took some action, man. All right.
Listen, I told you I will.
Our conference was just in February, man.
Yes, it was. Yes, it was.
Good job. That is what it's all about, my friend. It's about getting the education, networking, and taking massive action, man. So, you know, the congrats is on you, man. I'm glad that we could have a small part in that, but
hey, I quit my W-2 because of you guys.
Wow.
All right.
Okay.
Hopefully that sticks to be a great decision.
I know.
It is. It's the best decision of my life. Absolutely.
Great,
Thank
Love
you.
it, man.
Congrats.
Well, stay tuned. Appreciate it,
All right,
everybody. Have a good evening,
you.
everybody.
Bye. Thank you.
Bye-bye.
Thanks, guys.